Gold is bottomed out. Silver is bottomed out. I would be a big buyer. This is a massive head fake. I know I didn't expect it. Not that many people expected war with Iran to result in a big drop in the price of gold, because war with Iran is bullish for gold. And that hasn't changed based on this sell-off. It's still bullish. In fact, the longer the war goes on, the more bullish it is. But the way the markets have been trading, if the war ends on Monday, gold's going up several $100s on Monday. Because right now, everybody is focused on interest rates in the Fed. That's what got gold prices going down, the idea that the rate cuts were on hold. And now they're talking about rate hikes. But it doesn't matter if the Fed cuts rates or not. What matters is inflation is soaring, and so real rates are plunging, and the Fed is not going to hike. And even if it does hike, they're talking 25, 50 basis points. They would have to hike several hundred basis points to close the gap between inflation and interest rates, which they can't do.
Gold and silver have recently experienced a sharp and unexpected decline, but signs of stabilization are beginning to emerge, potentially presenting a compelling opportunity for long-term investors. What makes this move particularly interesting is that it comes despite ongoing geopolitical tensions, which would typically act as a strong catalyst for higher precious metal prices. Instead, short-term market sentiment has been dominated by shifting expectations around interest rates, leading to temporary selling pressure in gold and silver. However, when you step back and look at the bigger picture, the core fundamentals remain firmly intact. Inflation continues to persist at elevated levels, while real interest rates, when adjusted for inflation, remain negative. Historically, this type of environment has been highly supportive for gold, as investors seek to preserve purchasing power and hedge against currency debasement. According to Peter Schiff, the market is currently mispricing gold by placing too much emphasis on Federal Reserve policy and not enough on the broader inflationary reality. Even if central banks continue to signal rate hikes or maintain a hawkish stance, those increases are unlikely to outpace the true rate of inflation. As a result, real yields are expected to remain under pressure, which is fundamentally bullish for precious metals. In addition, ongoing global uncertainty and prolonged geopolitical conflicts continue to strengthen the long-term case for gold and silver. These factors tend to drive safe haven demand over time, even if short-term price movements appear disconnected. Taken together, the recent decline in precious metals may not represent a genuine trend reversal, but rather a temporary shakeout, one that could set the stage for a stronger upward move as underlying economic pressures reassert themselves. Are you curious about investing in gold and silver but feel held back by fear or confusion? This ebook is designed especially for new investors who want clarity, not complexity. It breaks down gold and silver trading strategies in a simple, practical way. No jargon, no hype. Why wait? Hurry up. Please visit this link to get your copy today and use code DUNDEEPLE for a huge discount. More than 1,000 people took the first step with this ebook, and today they're living proof that smart investing changes lives. Start investing fearlessly, wisely, and with a clear strategy.
Who knows where gold's going to go? I mean, 10,000 will be cheap, 20,000, who knows? But the dollar's going to go through the floor, gold's going to go through the roof. And so I think the sooner that you could buy. So again, as I've been saying, I know I didn't anticipate this big drop, but you know what? There's an expression about a gift horse, and don't look this one in the mouth. Don't ask any questions. Just take advantage of it, because it won't be long before people realize what's happening here and how bullish this is for gold. And there may have been some countries or somebody that needed to sell some gold right away because they had to stock up on oil, or I don't know what happened to drive a rush for liquidity. But the war was very disruptive right away. Nobody obviously expected it, right? It was a surprise that we just started the war, even though we had been building up our truth strength, in the region. I don't think people were prepared for that. In fact, obviously we were in the middle of negotiations. So the Iranians probably thought it was just a show of strength while they were negotiating. And in the meantime, we just started bombing them. But this war is not going to go the way the president plans, just like Nothing goes the way the president plans. I mean, I don't even know if they have a plan. I think they're just flying by the seat of their pants, and they're just winging everything, and they're just putting out posts on Truth Social like trial balloons, and they're seeing what happens to them. And the last one, right, went down like the Hindenburg. So I don't know how many more trial balloons they're going to be floating there. But in the meantime, this is a great opportunity. It's a great opportunity to buy more gold and silver. It's a great opportunity to buy these mining stocks, which had an even bigger pullback, a much bigger pullback. Now, I know that higher oil prices are going to be a negative for the gold mining stocks. I mean, but when oil was so cheap, it wasn't really a positive. The market never really credited the mining stocks for just how cheap oil was. So I don't think that they have anything to give back now that oil isn't cheap at $100 a barrel. But gold prices and silver prices are going to keep on rising. And the top line revenue is going to be more important than that line item. Yes, all else being equal, it would have been better for gold stocks if oil was still $60. But even at $100, there's still a steal at the current prices. In fact, I think there's still a steal at the prices they were at a month ago before we had this 30% pullback on the war. So again, take advantage of that too. Don't just buy gold and silver from Schiff Gold. And don't forget about T-Gold. If you're a Schiff Gold customer, but you're not also a T-Gold customer, make sure and set up your account and buy a little T-Gold and start building up your account so you have some gold that you'll be able to use as money, as a medium of exchange. Because in the years ahead, when we have massive inflation and it becomes difficult to deal in dollars, and more people don't want dollars. They want an alternative to the dollar. The number one alternative will be gold. And the most convenient way to trade in gold will be through online, through tokenized gold or through platforms where you can move the ownership of gold without moving the physical gold. You have the physical gold nice and safe in a vault, and all that has to change hands to have commerce is the ownership of that gold. And whether it's through a token or any other means, we have the technology to make engaging in commerce and paying and being paid in gold easier, more efficient than it's ever been in the past. See, people keep accusing me when I don't want Bitcoin, I like gold. I say, Peter Schiff, you're living in the past. No, I'm not. I'm living in the future. Gold is the future. Soon, Bitcoin is going to be the past. Bitcoin has no future, but gold does. It has a very bright future.
Do like, share, comment, and subscribe to this channel. Also, don't forget to hit the bell icon for more updates.